The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 13th wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I do everything we can to have an extraordinary Wednesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go figure out what they're communicating to us at just past 1 o'clock in the afternoon on this wonderful Wednesday. Of course, I want you to know that I'm absolutely grateful for your presence here. But most importantly, I'm here to serve you. So feel free, pick up that phone, dial on in. 877-927-6648. Internationally, 727-445-1044. Would love to hear from you. Hey, let's get this wonderful Wednesday kicked off. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 155 points. She's trading at 16,360. S&P down about 20 points at 1918. NASDAQ Composite down 70 points at 46.16. Russell 2000 off 20 points. Gold's up $5. Silver's up 42 cents. Light sweet crude is up 11 pennies. Leading the charge here to the upside is Chipotle. That's up $24, about 6%. Intuitive Surgical up $19, 3.5%. Let's see what else we have individual stock-wise to the upside. Cunard Cayman, it's up 11%, up $4. To the downside, you've got Priceline leading the charge, off $36. Lending Tree down $20. Whoa, 23% to the downside. Callo Bios, pharmaceuticals off $20, 84%. Holy shnikes out there. Regenerate Pharmaceuticals down $17. Amazon's off 16. AutoZone is down 12. So we've got plenty to check out. But the first thing is, what are the markets doing? Now, we've seen quite a reversal off of the highs early in the morning, around 4 o'clock in the morning. As an example, the Dow futures, about a 250-plus point move since the highs, from the highs to the lows thus far. A little over 1.5% move. NASDAQ, the largest move percentage-wise off of the high, down about 2% from its high, off about 95 to 100 points. The ES Mini down 33-ish plus points, about 1.7%. So we've seen a significant reversal from the gains that were piled into at about 4 o'clock, as I say, about 4 o'clock earlier this morning. Let's take a look really short term here and get a feel for what's going on as swing points are being tested. Now, this is a 5-minute chart out here for the Dow futures contract, and what we can see is thus far we've seen, in essence, 100% move of a move. What do I mean by that? Well, if we take a look at yesterday at 2:20 in the afternoon, as we were going off the air, that's where the market had formed its bottom in order to make that move up into the 350 time frame, and that's 350 to 4 o'clock inside the Dow. So we've seen a complete 100% move of a move. Now, the volume on that swing point on the 5-minute chart was 2,056 contracts. Prices come back inside here with light volume. What do I mean light volume? 1,184 contracts, 1,460, 1,750. But what we don't have is any kind of sign of strength moving out of this level. So if, in fact, price is unable to stay above 16,280. You're at 16,282 right now. Then price will go down and at least test the 16,225 level. But you do have a 100% move inside the Dow futures. Inside of the NASDAQ, that's had the largest move out here. The NASDAQ has come all the way back and has tested its swing point low. Now, the swing point low, that was 220 yesterday afternoon. Volume on that swing point, 4,263 contracts. That has had light volume tests, 2 in a row out here, maybe 3. I said it's 42.63 and a quarter. What do we get down here at 12.55? You got to 42.60, 3.75. No. So we've only had 2 tests of that level, 2,600 contracts versus 42, and you've had 2,700 contracts versus 42. So the swing point is not being taken out with volume, 100% move of a move, no kind of sign of strength or anything like that off of the bottom, but, it should at least rest here. The question is going to be if you see some kind of sign of strength moving off this bottom, that okay, the selling is over. We see what these markets do. They give something for bulls and bears. If the markets just move sideways, do it on light volume, then what you're looking at is the market is just revving up its engines because it's run the race here, and so it just simply would be moving sideways and getting ready to try to take out that low of 42.63. So a little pause point should be in store as we take a look at the NQ. Let's take a look at the S&P futures contract out here. S&P futures contract trading into the top of that same swing point. Let's go ahead and put the bottom of that level out here as well. So we're looking at a price point anywhere between, well, that got to grab the right swing, though. Give me a moment to do this correctly so I gave you the accurate numbers. And that would be 1905.75 to 1912.50. Again, the move to the downside, or at least the test at that swing point level, has been on lighter volume. You're dealing with about 20,000 contracts. You were down here at 12.55 with 17,000, then 14,000, then 18,000. 8,200 is where we're at right now. We've got this just started 5 minutes, so you're about halfway into this deal. So we can just multiply that times 2. That's 17,000. So again, light volume as this swing point is tested. So the key here is going to be, as we just took a look at those 3 contracts, is there some kind of move higher, some type of sign of strength? Then that says the selling's over. Is the market just kind of moves sideways-ish? And if it does, says it's going to go ahead and try to take out. Now, in the case of the S-Mini, it has not tested the bottom of the swing point, which would be 1905.3 ticks, 1905.75. So that's what's going on the ultra short-term basis. What else do we have going on? Well, we've got the War of the Worlds of Stevie Wonder singing in the key of G out here. If we take a look at that, let's look at the 30-minute chart here for the NASDAQ futures. NASDAQ has been the one that has been moving lower percentage-wise off of the highs. Now, when the NASDAQ was making its high earlier this morning, that was at 4 o'clock. Price was moving higher, doing it with less relative strength out there. And then about an hour later, at 5 o'clock, we saw the bears actually show up for work. So if you're wondering, what time did the sellers show up for work? It's very clear in looking at this chart out here. They showed up at 5 a.m. to begin working. They showed up. They punched in. They said, hey, where are those TAS market profiles out there? And they said, oh, look at that. We've got some resistance right at that 7th wave move. Support was down here at 43.35. Support finally gave way at 10 o'clock this morning. We can see that price broke through. That's the little black dash line on my screen out here. And then it was just simply a big, huge waterfall cascade. On 30-minute charts, we saw bottoms of hammers fall out there, right? You're wrong when you take a look at that hammer. Now we've seen that 100% move of a move. That also says that if this area here fails, we know there's tests on light volume. That says, though, if this level fails, where is price going to move back to? The next set of swing points. Where would that be? In the NQ, that would be 42.37. But I said there is a battle going on with the Stevie Wonder singing in the key of G. So when we get back, let's go look at the bullish side of that 7th wave move, that price relative strength divergent pattern. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Dow's off 148, S&P is down 20. Welcome back. We were talking about we looked at the NQ, the NASDAQ futures contract. We looked at that 30-minute chart. We saw the pattern that was associated with the high that was put in earlier this morning, about 4 o'clock. Since then, we have seen the sell-off. That pattern actually worked better than I thought that it would, but it's working. Now let's take a look at the upside out here. When I say the upside, delisted, okay. Thank you. If we take a look at the 5-hour chart here for the ES Mini, it's got the exact opposite pattern of what we looked at that had made a high. So we've got, and this is the 5-hour chart, so obviously 5-hour, a little bit more, I don't know if I'll call it more important, but let's just look at the patterns out here. Price was moving lower. This was yesterday. Was it yesterday or was it on Monday? Let me give you the exact, that was about 2 o'clock in the afternoon, and it was on the 11th, so that would make it Monday. So as price was moving down on Monday, you get to that 7th wave move to the downside. You get price stretching itself, moving lower, doing it with less relative energy. You have the cavalry show up, that little piercing candle, that's a bullish reversal signal. Some additional follow through to the upside out there, and as long as that low holds out here, then this pattern is also still active. Active meaning what? Meaning that price can move higher. Now at this stage here, if we take a look at its market profiles, this 1914 level is a key area of support. Should be a key area of support that we're trading into right now. Of course, resistance, price has never been able to get up and actually test the resistance level 1950.50. So you've got, this is really the tale of two different stories. Now, if that low gets taken out, the low being 1892.50, this pattern will have failed. Well, this set of patterns will have failed. There's an A to B equals CD pattern inside here as well, but we're not going to take a look at that. Why? I don't know. I don't think we need to. So what else can we look at inside of the charts that would provide us with any type of information? Let me just take a look at the Dow. So here is the Dow futures contract 5-hour chart. It too was pushing lower on Monday morning, Monday afternoon. Well, when was it? No. This was Sunday evening. So this is Sunday evening at about 11 o'clock. Price was pushing lower, doing it less relative weakness out there. Now it's only in the sixth wave, so price could actually get lower, take this out, and then potentially form a reversal. But at this stage here, we still have higher highs and higher lows inside the Dow futures on the 5-hour time frame out here. Okay, let's go take a look at some of these stocks that are moving, and then we'll probably go take a look at the financials, because I believe it's the financials here, which are down about 30. So let's just start with the financials. It's the XLF, which is down with 36 million shares off 30 cents out here, and see what it is doing. Now, the financials, the XLF, I'm just trying to get my tools out here. We can see that they're trading into the most recent swing point low, which was October the 2nd. Let's go get some volume on that October 2nd swing point here. Let's add that to our chart. And we can see that the volume on that trading session, we'll see that in a moment, that's volume of 61 million shares. The very first time that was tested was on the 11th. That was 57 million. Again, 57 was going against 61. Light volume, but they'd have to say, within a plus or minus, probably about the same type of volume. Yesterday was not an actual test, 65 million shares, because the low was only 22.01 versus 21.98. But today looks like this level is going to be tested. We've seen a low so far of 21.99. And 21.98 is the actual swing. Now, today's volume, 36 million shares. So 36 million shares at 122. Give me a moment here. Let me pull out the old calculator. So you've got 36. We've been trading for 4 hours. Straight line math says you do about 58 million shares. So what we can see here inside the financials, there's trouble. No, actually, I take that back. Still another light volume-ish test. Going to be very similar volume, 61 million shares. So the XLF is not blowing apart, and this is one of the weaker, I believe it's one of the weaker of the sectors within the S&P 500. Let's go check out the number one weighting sector, the XLK. Let's go see what this is doing out here. So today, trading out at 40.47, and we're going to look at the same swing point. Well, price has not made it. Well, that would be September the 29th. Instead, let's look at October the 2nd. That was a move to the upside, a little bit of a breakout session. And you can see that the top of that breakout, or the top of the gap, is $40.08. And the volume that we're dealing with there is about 14 million shares. And there was a test of that with 19 million shares on January 11th. So it looks like 40.08 needs to be at least retested again. And he closed underneath that, and price should actually come back into the September 29th level, which would be anywhere between 39.26 and 38.45 out there. That's the number one sector. Again, volume here today, 11 million shares. 11 million shares at this time of the day. 11 million says you do about 17. And that 17 going against a breakout of about 14. So the XLK has got some volume to the downside. Now, last time down here was 19 million shares. That was 2 trading days ago. So volume today, benchmarking it against just 2 days ago, just a tad light out here. If we take a look at the XLV, I believe that's still the third weighting inside of the S&P 500. Let's go see what it is doing out here. So this is actually testing its swing point that's got huge volume from September 28th. Now, the top of that candle session is priced at 66.60. Ooh, that's a little devilish out there. Nonetheless, that is the price point. Now, 66.60 was tested 2 days ago, and the test was 66 million shares from back on September 28th versus only 28 million shares. Today, you've done 7.2. 7.2 at this stage, straight line, takes you to about 11 million shares. Half the volume inside the test that was done just 2 days ago, which had 28 million shares. So the XLV actually fairly strong. Now, I don't know what the number one. Well, let's find out. Let's go see who the top five. What the top five holdings are inside of XLV out here. We'll see, and this will be as of last evening. Let me turn this off, then I won't have to worry about that. So inside the XLV, you've got Johnson & Johnson, Pfizer, Merck, Gilead, Allergan, Amgen. The top 5 holdings, so there's 56 constituents within inside of the XLV, and the top 10 represent 54%. How about that? So the other 46 represent the other 46%, 1% each, basically out there. Pretty interesting. So Johnson & Johnson, let's just go see what in the heck Johnson & Johnson is doing out here. JNJ is the ticker symbol. It must be doing fairly decent out here. Just taking a look at the XLV. Now, in the case of Johnson & Johnson, you know, it is much stronger than the entire sector. You can see that. I believe we were taking a look at a September 28th swing point just to give you a feel for where Johnson & Johnson is trading at versus the entire sector. Here's the swing point from September 28th, 92.07. You're trading at $98.34 out there. So as far as tests or what it's doing, just really came back to that October 15th level here. A little bit of a breakout. That had some volume there of 9.5 million shares. That was tested with 8 million shares out there. Still a trend to the downside out here, but Johnson & Johnson looks fairly decent. We've got the Dow off 176, another leg to the downside. S&P's down 22. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 180. S&P's down 23. Have a request here to take a look at a ETF, HDGE, Advisors Rangers Equity Bear Fund out here. Again, the ticker symbol is HDGE. As far as not the most liquid of ETFs out here, you've got volume, for example, on December 31st. Of course, light trading session, but still 58,000 shares out there. So there's been some pickup in volume, about 600,000 shares out here on January 11th. Now, with regard, the question is, let me go back. What was the question here? Would you be a buyer of hedge, HDGE? What would be your target out here? Well, the target is very clear. That being that this has a high volume high that has not been tested. That's the August 24th level. So this is just a bear fund. It's just like reversing, taking a look at the market out here. So it is trading inside of that swing point, which has 2 million shares on lighter volume. So this is acting just as the general market, so to speak. However, the difference is that this has, I don't know the number of holdings inside of this, but it's number one weighted holding. Again, this is a bear fund, so this is to the downside, would be Harley Davidson. So Harley Davidson, HOG, let's just take a look at it. The hog, that represents about 4.5%, and that was as of yesterday. So 4.5% of the equity is Harley the hog. Let's go take it. See, that has been trading to the downside. Let's go see what Harley is trading into, if we can try to figure that out. And in the case of Harley, it's really this swing point all the way back. It's a weekly chart, by the way, that we're looking at. So Harley is pulled all the way back with light. Well, let me see here. With what kind of volume? With light volume thus far. And what we're looking at, folks, is the swing point from the week that began July 30th, 2012. Now, you're trading inside there, and so it would look to me like Harley, irrespective of this fund, Harley is very likely going to get back to 37.84 and at least make a test of that level. It ought to, just depends on what the volume is as it gets down to 37.84. Thus far, it's been pulling into that weekly swing point with light volume. Caterpillar is the second holding. So that says, hey, this is going to go lower. That's number one weighting. That says that regardless of what the market does, hedge likely heads up to the top of that swing that we were taking a look at. 4% of the weighting is inside of Caterpillar. And again, we have a weekly chart on our screen here. Now, we know that Caterpillar has taken out the lows from September 28th. That had 45 million shares. This week here, you've got 22 so far. So it's on, we'll call it similar volume. Last week, the test was on lighter volume, about 38 million shares. So you're below a swing point. That says you travel to the next swing point area. And inside of Caterpillar, from a weekly standpoint, that would say you probably come down into the lows out here from February 2010, and that's at about 50-50. So your top two holdings, 8% of it are suggesting that they want lower price out here. The third symbol out here, Grubhub, Grub, that is down about 4. I'm sorry, not down. It is down. In fact, it's at its lows. And so we're not going to be able to figure out where Grubhub is going to. But these guys have taken the big short, so to speak, on this equity. No idea when they got in, but that represents 3.8%. No way to know where this thing really is going. We could take expansions of swing points and things of that sort. But I don't even see, looking at this chart, any reason to do that. So if you take a look at HDGE, their top three holdings, at least you and I, have not been able to find any reason why what is about 4, 6, 7, 10, 11, 12, 12.5% so far. Deutsche Bank, DB is a ticker symbol. That's the fourth weight inside of this equity. That represents about 3.7% as well. Where this is a weekly chart, where's this thing headed to? No good is where this thing is headed to. This is headed all the way back down to the lows from 2009. How about that? How about that for a trip out here? Let's put this on the monthly. Well, let's leave it on the weekly chart here just for the moment. Let's actually pick out the swing point low from back in 2009, and then we'll just simply put some lines on this and draw it across. So it looks like the actual swing point low was from January 19, 2009. So it looks like that is probably where Deutsche Bank is headed to, which is between 1960 and 22.48. If we take a look at where it's trading right now, it's trading right at 22.41. So it's trading below that level. Now, the volume back then, just for the heck of it, the volume on that swing low was 7.7 million shares. You've done 5.8 million shares already. So peak, I would have to say that taking a look at just simply the top four holdings. Let's finish it off. Let's take a look at CarMax, KMX, the top 5 holdings inside of this equity, just to see where things are going. Is there anything here that's finding any kind of support? In the case of CarMax, that is testing the swing dated back to October 13, 2014. That has volume of 16 million. You came into it last week with 25 million shares. So you're still trading inside there. This wants lower price as well. Now, it may only get down to about 43.27 when it tests the bottom of that swing, but the top 5 holdings inside of this ETF, and that's, folks, how you do it. Okay, you figure out, if you go take a look at some type of ETF that you want to invest in, go find out, go to their website, go find out what the top 5 or 10 holdings are, and just see if it confirms the move out here. So I would have to say, based on what we took a look at, HDGE is headed for its high volume high. Now, this is the weekly chart. It's a high volume high in the weekly chart as well, up to about the price point of 12.51 out there. Hope that assists you in your trading and investing. Okay, let's take a look at a couple of other things here that are, let's continue looking at some things moving to the downside, as long as we're going to be nervous Nelly out here, or Debbie Downer. And I don't mean anything negative to any of the Debbies out there that are listening out there, and I think you know that to be the case. But if we take a look at Priceline, let's just stay on the weekly chart here for the moment. The Priceline here broke out to the upside back on the week of February 16, 2015. It did that with a type of volume, 5.6 million shares. This week, you're pulling back into that breakout area with light volume. Now, it's not a swing point, but you can see it had two wide-ranging bars off of the bottom. The bottom here being the week of February 2nd in 2015, 4 million shares there. Let me see what a daily chart shows us out here, see if there's anything to try to support Priceline. PCLN, again, is the ticker symbol. And you know what it's doing? It's testing a swing from June 29, 2015, 707,000 shares. You've done 455. 455, math on that says that today, and this is the day of the test, 455, says you do around 700 or so, 7 to 730. So it looks like Priceline is going to at least test the low, 1103.45. Well, it's below that low. It's taking out that low with volume. Yeah, that's what it's doing. That says you go down to the next level, right? And it's down below this breakout area. That's the if Priceline gets below 1067.93, then it will move all the way down to about the 1,000 or the 992 level. That's my take on Priceline. Dow's off 198, S&P down 25. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 210. Being down 210, the Death Cross is back in town out here. The Death Cross being where the 50-day simple moving average crosses below the 200. Now, I don't know how the day is going to end up out here. We had the Golden Cross just about a week or 2 weeks ago out here inside of the Dow, and now we're back to the Death Cross. Now, the interesting thing about the Death Cross out here is typically that is where the markets pause. So we know that we're still in a market that is extremely oversold out here, and we've got a what looks like the Death Cross is going to be active again today inside the Dow. Unlike many people, or the way that it gets purported out there, is a Death Cross is like the end of the world. The majority of the times it's a pause button, like on your remote control out here. So we're back to the pause button. That doesn't mean that things can't go lower out here, but I'm just telling you the typical pattern behavior of a Death Cross is, in essence, especially inside the Dow, is is where you start to see a pause. Now, it can be a pause, refresh, and then a move lower out here, but it is typically where you see a pause. The most recent Death Cross that the Dow had, as an example, was back here on August the 11th. August the 11th, we saw the Dow go ahead and move higher, or move sideways for 2, 4, 5 sessions before things just simply fell apart. So, is that the same pattern? And then what I'm referring to is back here. I'll just go ahead and grab a box, and we'll just so you can see, in essence, there's the price area out here of that Death Cross. Here's where we're in essence right now. So that's what's going on inside of the Dow. Now, the Dow as well could also today make a lower low. And if it makes a lower low, let me do this here, and its advanced decline oscillator could be making a higher low, that's a divergence worth paying attention to out here. But that we won't know until we see how the day actually ends out here. But that is what's going on inside of the Dow. Inside the other indices out here, what can we look at? Just again, continued oversold conditions inside the NASDAQ composite. If I take a look at it, its advanced decline reading here, minus 79 was low back on January 8th, and you are at minus 80 out here. So there's no potential bullish divergence as we speak right now. But if this is more of an end-of-day indicator, I'm just taking a look at it as a 144 in the afternoon, just looking for any kind of clues, bullish or bearish, just really looking for clues out here. That's what you and I are supposed to be doing. There's a question that came in and says, says, has oil bottomed? And so let's go take a look at oil. And if we look at light sweet crude, this is the current contract, the February contract, you're trading at 30.20. And here's what I know when I just simply look at the pattern. This candle here is clearly wrong. That was March the 6th, so I don't know what that is all about, bad tick or something, but let's just do it like this. We do have what would be referred to as a bullish wedge that is forming inside of light sweet crude. Now, all I'm doing is coming off of the bottom, the low from March the 18th. By the way, that low on this contract was $53.15. Then the next low is $40.69. That was the August 24th low. So we can see the price is moving down into that trend line. Nearly touched it yesterday. Maybe it touches it today. And we can see we've got another trend line here, a much shorter trend line. This one just coming off of the highs here from November 4th. And the next touch point out here that I use is December the 4th, so 1 month later. Now, that's there's been nothing that's confirmed. Today was the opportunity for a bullish engulfing to have formed, and that would have said that you would have bounced into the upper trend line, descending trend line out there, maybe taking it out, but you do not have any kind of bullish reversal signal as of yet. So I don't know what the time frame it is that you were looking for. This I'm referring to the person that emailed me. But if we just simply take a look at what's going on in some of the short-term time frames out here, let's go tag the 10-minute time frame. Let's just simply go to ultra-short time frames out here. So we know that we're coming down. Oil's coming down into it's formed this little bullish wedge out there, wedgie pattern out here. We know that there was the potential for that bullish engulfing. That was up until some kind of, I'm going to guess, some type of release of numbers inventory. Must be because it was right around the 10:30 time frame. So I don't know what was released out there, but well, I do know what was released. So do you. The hounds. They said, release the hounds. And so they did. 50,000 contracts sold during that 10-minute time frame. Now, you've got a wide-ranging bar with massive volume to the downside out here. You've got a swing point on the 10-minute chart that was back here that had decent volume. That was January. That was yesterday at about 2 o'clock in the afternoon. Now, the volume there was 18,000 contracts. You can see that price hit that level with 50,000 contracts, and you are testing it as we speak right now. The test this time around, though, is light volume. What you'd really like to see this do if you are going to go ahead and take a long trade on light sweet crude, you'd love to see it test the low that came in during that 10:30 to 10:40 time frame. That low is $30.10 because you're not going to have that type of volume there. So you'd like to see some kind of rejection of that swing. And a rejection means you probably, in 10 minutes, go below 30.10, and then you close back above 30.20, only 10 cents out there, and do both those tests with less than 18,000 contracts out there. Then maybe, but this is going to potentially find some significant resistance on any move up into the 31, 34 level, or at least should find some resistance. So I don't see the that's what the charts are showing. That was just going to a 10-minute chart out here. It's not going to get any better if we go to a larger time frame like the 30-minute chart out here. In fact, it just pretty much gets, well, let's see. Let's go see what that 30-minute time frame tells us. Yesterday, during that 30-minute time frame, 47,000 contracts. You're trading inside it. You know, if we're going to make a decision based on the 30-minute, that's going to tell us that you're going to come down and test the lows of yesterday, 29.93. Why do I say that? Because that had volume of 47 million shares, and that was what was hit with 85,000, that's I said shares, but 85,000 contracts during that 10:30 to 11 o'clock time frame. You push into a swing with volume, says you go test it, especially when you are trading inside it. So you want to probably wait for a test of 29.93 and then make your decision from there. That's taking a look at the February contract for light sweet crude. Gold is up $4 right now. Trading out at 10.8970. Let's try to get a feel for what gold is doing out here. Let me take a look at some of my other shorter term contracts. So what are time frames, I should say. What was gold doing? What was gold doing? So if gold is Let me put this back to the daily time frame. Let's go ahead and turn on our market profiles out here and get a feel for what's going on out there inside of the world of gold. So you're trading at 1087. I believe the low's been 1079. I wrote down the number. Let me see what it is. Give me a moment here. So the number I wanted to see gold get down to was 1083. Was it gold? 1085. 1085.76. What did we get down to? Yeah, so we're there. So if gold can close above, this would be subtle. I'm not going to even explain the number here, but actually, if gold can close above 1085.76, 1085.76, that would be bullish. And you're 1087.10 right now. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 218, S&P down 28 points. It is looking ugly out there. You know, the patterns that you and I like to track to tell us what the markets are doing. There's nothing here that's telling me that these markets are going to, we're certainly not going to turn between now and 2 p.m. Maybe David White will find something for you. So that price relative strength divergence and seventh wave pattern to the upside inside the NQ, that was a significant high out there and I don't see anything really on any time frame, so to speak. And if I go back to the NQ, just an example, I keep all these charts on my different screens, different time frames, just so I can, in one snap, be able to take a look at and understand where the markets are at, what they're doing on these multiple time frames out here. You can see that coming off of the high, we're in wave number 6 here, potentially to the downside. But what the market doesn't have is the stretch that we've seen here during the last half hour. This is a 10-minute chart that we're looking at. That's been pushed down there with some strength. So that rubber band can continue to be pushed to the downside. That's inside the NQ. If I take a look at the S&P as well, similar count to the downside, but again, all of the pushing here during the last 10, 20, 30, 40, 50 minutes nearly has been with some energy to the downside out there. So at this stage, we don't have anything that tells us that this route to the downside is over. Not that I can find on really any time frame chart. That doesn't mean that the market, the market's going to do what it's going to do. It's really just incumbent upon you and I to read what the current message is at all times. Now, I did give you a number on gold and said that if it closed above, 1085.76, right now you're trading at 1091, that would be a very subtle and important bullish point out here. Now, if we take a look at some of the mining equities out here, if we take a look at the number one mining equity, I believe it's still the number one weighting inside of the GDX out here, which would be Gold Corp. It's testing its swing point from back on the trading day of December 17th. That had 9.7 million shares, and it's done 6.8. So 6.8 should equate to approximately 6.8. We were trading, in essence, for nearly 4.5 hours. That says you do about 9.8. So Gold Corp is moving into a swing point with volume. It's testing that swing point, the low being 1087. You've got down this morning to 1082. You might get a rejection on price, but you're not going to get a rejection on volume unless volume just simply dies on the vine out here. That says that Gold Corp is likely going to go down and test that level. Let's take a look at Barrick Gold, which is unchanged as we speak. Barrick Gold is much stronger than Gold Corp out here. It's nowhere near its lows, which were on September 23rd, and the low high of that low is 6.25, 623. You're at 788 as we speak right now. So Gold Corp looks pretty good. Plus, it has pulled back after making a nice move on January 7th, but 38 million shares. It has pulled back with lighter volume out there, and that is ticker symbol ABX. So on these mining equities, even if you do get the bullish reversal, I think you want to go find the mining equities that are performing the best as opposed to the entire basket, picnic basket. I did mention that Chipotle was moving to the upside, up $25, nearly 6.5% out here. And that was after coming back and testing a breakout area in the 404.59 level. Volume today so far about 2.4 million shares. I'm not saying go out and buy Chipotle, but it did come back to a support level. I don't know if it did it on light volume or not. This is the first time we have seen any kind of significant move to the upside since December 17th, nearly a month. Folks, stay tuned. David White will be up next. Have a wonderful Wednesday. I'll see you on terrific Thursday, folks. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.